Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Wednesday. We're at the 14th of January, 2026, and we're at about 6:25 p.m. Central Time. Sorry I couldn't put out the updates last night. I had a big birthday, a big one, and was with family and my close friends. We traveled from Indiana back into Chicago for a great dinner, then back, and I'm back in the saddle. Pretty soon, you'll be seeing my pretty face, as I like to call it, on these videos. We're coming back. We're getting very far along in the new studio with our green screens, and also that should come together quicker than you think. So I'm very excited about that because I like to do that, and I think I can explain it and show things, and it teaches a lot more. Now, what we're dealing with right now, and you've got to understand, is there's several uncertainties. One of them is the U.S. going to attack Iran or not. You cannot believe President Trump when he tells you that he's going to attack, or then he'll tell you like he did today, no, we got a call from an insider with the Iranian government, and they're going to stop killing people, and they realize what they've done. If you're buying anything he says, he's setting you up. Because he said, and rightly so, I remember him saying it, you don't tell your enemy what you're going to do. And that's what he's doing. He's not going to tell them what he's going to do. He will do it, and he will surprise the market. And the market is fearful that this Mideast situation could quickly get even worse. Possibility that the Iranians try to shut down or do shut down the Strait of Hormuz, which has kicked up the energy prices. Okay, I get it. But they're up on this flash in the pan that either the government topples or it doesn't. You know, we've seen this in Iran many times, so it's not the first rodeo with it. And so far, the Ayatollah has been able to quell each of these. The people have to stand up and they have to do more. And that's what I said on the last one. They're doing more. Now the question is, can they keep the pressure up? And you'll find out. Should they count on the U.S.? I don't know. I don't know what our president will do or don't do. Not do. When we look at the dollar index, it's pushing the 99 level, and you've taken the euro away from the 118, 119 level back into the mid 116s. That's basically what's going on. When I take a look at bonds and notes, why do you think you're getting lower yields? Well, part of it, of course, is the fear factor. Why do you think gold has gone up to $4,650? The fear factor in part. We know there's central bank buying, but that's the fear factor. They don't want to own the dollar under Trump. They can't count on him. So there's movement away from the dollar. One of the ways to do it is with that. And we're seeing that play out. It's also been helping Bitcoin. People don't realize Bitcoin has come off the 85,000 level and it's rallied $10,000. I mean, that's a nice rally. That in itself is a year rally for some people that trade these. So that's what I think is going on. The other factor is right down here. The legality of the Trump tariffs. You think the market's not worried about it? How much do you have to pay back if they're declared by the Supreme Court to be illegal? Now, there's many ways they can be illegal. There's many ways that the Trump administration could try to get by it. But what the market's fearful of is there won't be a clean bill of health. If there is, you remove that. It leaves you with the Iranian situation and then a Fed that is going to fight what they think is a weaker jobs market. For my full subscribers, tonight's report, I cover what the Beige Book that came out today covers. And Fed members are seeing as a whole, they're concerned about labor. To most of them, we haven't hit the 2% inflation. It remains the goal, but it appears from everything I read, when you read between the lines, they won't come out and say they're comfortable, of course. They'll say they haven't hit the 2% target. But I don't think they're that worried right now. The big question is, what's with tariffs? Are we going to get another price hike off them or not? The fact that President Trump has put a 25% tariff on Iran scares me, because what does China do with that? And I'm concerned that if we've done that and we've hurt their source of cheap oil, so to speak, what do they do to retaliate? So what we've got is the New York Empire State Manufacturing Survey coming out at 7:30, the Philly Fed Regional Business Activity Index at 7:30, jobless claims at 7:30, November import-export price at 7:30, at 7:35 Atlanta Fed President Bostic speaks. It seems he's speaking every day. We then get a 2-hour break, but here's my point. The algorithm traders are going to be all over this market at 7:30 in the morning. Just be ready for that. The natural gas report comes out at 9:30. We're going to get more bank earnings. And today's bank earnings were ugly. They weren't the ideal numbers. Don't get me wrong. The banks are doing just fine. But when you're up as high as they are, just fine sometimes isn't good enough. That's the point that I'm making. So why don't we take a look now at the chart action and see just what we've got and where it's taking you. On the S&P for the week so far, we're down over 0.6%, down 47.5 points. Not a big deal, but it is a down move. You can see that on the daily bar chart, not the weekly, how the market has come back now. And you're starting to rally again, but this is what date? Always do this, January 6th. Let's go to where the market's at. Now, I do this sometimes on purpose. You got to catch it. Look how the market's pulled back. So you went up this week. You made a new all-time high, and you have stalled out, and you're backing off a little. Also, the pattern has changed. Instead of the market having higher lows and higher highs, you have a higher high and lower low pattern. Where's it fighting a battle? I told you that I thought it would go back to the 18-day average. Just go look at it all week long than last week. And I said, I think if it pulls back, that'll be the battleground. You're still in a seasonal uptrend, and it doesn't end until mid-February. So I don't believe this market's going to tank. That's my point. History doesn't show that. When I take a look at how the market's doing right now in terms of the Bollinger Bands, you're not hitting them. So you haven't hit them since back over here. And that date was December 18th. So here we are approaching almost a month later, and you haven't hit a band since then. Momentum turned down on you. So when momentum had been up and then it turns down, what do? Give you an example. Here you got an embedded reading. Embedded, both numbers over 80, certainly both over 80, and then you lose the reading. And when you lose it, you typically go back to the 18-day average or the closest main average, and the market goes back to, it's like a pinball machine that you tilted. It's a reset. Now it's going to try to figure out what it does. In the slow stochastics over here, there we are, you've got in the NASDAQ, the higher high, the lower low. It never did embed. It just got itself into overbought territory. Same in the Dow, as it's now approaching the 18-day average of closes out of its uptrend. There's one market that's not out of its uptrend. It's the Russell 2000. So it's the strongest of the group at this point. You have a clear pattern of higher lows, higher highs. Is the market embedding? Follow this. Day 1, 2, 3. So if it breaks tonight and comes down, I think you'll find buyers as long as this market doesn't get back under the 80 level, as long as you first don't take out the highs of today, the 14th. In the DAX, look what you did. You went to that upper band. You peaked out today. Big reversal, outside day down, and now you get some profit taking. That makes all the sense. That actually was yesterday. My mistake. Yesterday. And now you're getting a little profit taking. As long as the market doesn't get underneath 46, 42, it's in a nice uptrend. Then we get to the 10-year notes. And again, I think the market is, you're seeing buying in this, not because of the fundamentals as much as the fear factor. People wanting to park money because they don't know what the president's going to do about Iran. In the 2-year note, lower highs, lower lows, still very much in the bear camp. Dollar index getting a bid. I'm not convinced it's because of the economy doing so well, but it is. But what's the Fed going to do about interest rates? If we hear that they're going to cut rates, then the dollar will weaken. I don't think the Fed's going to cut rates for quite a while, but that's the camp I'm in. I don't know that I've seen weak enough labor markets to get them shook up. And if you go to the CME Fed Watch page, there's almost a zero chance of them going to do anything in January. Japanese yen, lower highs, lower lows. Now, if you watched this morning, I said that the prime minister is apparently getting ready to call a snap election. She wants to get verification and validation from what the voters think. Is she running this right? She has stood up to China. Do they like what that is doing? So there's many things that are going on. And if she does it, she hasn't done it yet, but the word is that she's going to do it as early as next week. That will set a lot of things in motion. More important to me was I kept telling you, don't you dare buy into the news when the Japanese ministers come out and they say, oh yes, if you play with the yen and it goes down, you will be there and you don't want to be short. Of course, that's what they'll say, but they haven't done it. In Bitcoin, higher lows, higher highs. I still think a bottom is now in place in Bitcoin. And on the energy markets, I'll call this a fear rally. We haven't yet embedded, so that's important on the stochastic. You're just in overbought territory on a heck of a rally. Heck of a rally that's geopolitical in nature, not demand-driven orientation. And that's what you want in bull markets. More demand, not loss of potential supply. And we haven't lost any supply. That's the key. Iran is still shipping oil. There are plenty of tankers that are refusing to go into their ports because they're fearful, with insurance purposes, if the U.S. attacks, what happens? So there's tankers lined up. I keep reading how many are doing it each day. Russia's having a problem with the same thing. They've got a lot of oil at sea. And China, if you looked at their numbers, their trade surplus numbers were phenomenal today. However, if you really look, there's no local demand, in other words, domestic demand coming in, and that's a problem for the economy, and they have not solved the real estate issue. So, do they need that much oil? Becomes a key question. I'm Ira. You have yourself a great evening. I'll catch up with you first thing in the morning. Take care.